Hey everybody, this is Chen with Trader to Be, and today I would like to talk about how to set up trades using the average daily range. So the purpose of using the average daily range is to essentially help us set up trades with realistic intraday risk reward ratios. This technique will allow us to know how much a typical stock will move during a day, and is generally built upon understanding the ATR, which is the average true range. The information here, we will use this to help us understand how much a stock is expected to move in one day. And over a period of time, we can get an average of how much a stock will move during an intraday trading period. And based upon this information, we'll be able to help us set up highly probable profit targets using this method. So this method is really useful for those who have trouble setting up proper risk reward ratios, for those who tend to scalp the markets with very small profit targets, or those who do not have the confidence to hold on to any particular position for a long period of time, only to see that once we got out of a trade, that it continues to move in the direction that we were betting on, a very common problem for a lot of new traders. So this technique will essentially give us a confidence to hold on to a trade much longer. So the average day range is similar to the average true range, except in this case, we're only looking at how much the price of a stock fluctuates during the intraday trading hours. So essentially, the highs and lows of the day. We take a look at this range over the last 5 days or more. When we average out the range, we will get the median ranging price over a set period of time. So a good example of this here, for this particular stock, MU Micron Technologies, we'll just look here at the chart. We can see over here, the low established on the daily charts as well as the highs. Over here we can see this information being displayed in the high lows, the high being $60.41 and the lows being $57.02. So when we take this information, we will know that the highest traded price here, the lowest traded price is right here, and we have the average, or sorry, the total daily price change is $3.39. Now, if we do the same thing over the last five trading period, we will get the daily fluctuation for this particular stock. And now when we take this number, and then we average it out, we can see that over the last five trading periods, that the average daily fluctuation for this stock is $2.74. So now that we know that this ticker will on average move about $2.74 over a 5 day trading period, we can use this information to help us assess the probabilities of achieving our reward. So we can begin to question, what are the chances of us gaining 100% of the average daily range of $2.74? What are the chances of us gaining 75% or 50% or 25% of that average daily range? The idea here is that the higher the percentage of the reward on the average daily range, the harder it'll be to achieve it. So if we are to aim for a 50% of the average daily range, which would be about $1 and some change, that would be much easier to achieve rather than going for the full 100%. So in this particular case here, in the situation, let's say that we know that the average daily range over the last 5 days is $2.74, and we want to extract 25% of that move. That would equate to about 68 cents. Now we must set some realistic risk reward ratios. So we want to achieve a typical risk reward ratio of 3 to 1, and we know that there's a high chance of us extracting 68 cents from this reward on the move. Then our risk on this particular trade has to be set at approximately 23 cents. And so to give us a better visual representation of how this looks, we can begin to see here the red box here represents our 23-cent risk, whereas the green box represents our 68-cent reward. And so as we can see during the day, as this particular stock is trading, we can see that there's a new low established right here in the initial opening balance. And as the market tries to rebound the price, it comes up and then retests that low again and fails to break. Buyers come in, sends the stock trading up much higher, and then it comes back down again. This is when we want to ideally enter a trade because it is most optimal for our risk reward based upon our average daily range analysis. So when we enter a trade roughly around 10:15 here, we can see that if we were wrong on the trade, our 23-cent risk would equate to the new lows of the days breaking. And so that way we know that we're absolutely wrong on the trade and we get out with a small loss. However, if our analysis is correct, we enter the trade roughly around the 10-15 time frame, we can see that this market will be able to give us with a 25% probability that the price will be more likely to go up 68 cents from where we entered the market. So in this case, our risk reward analysis is much greater, and this gives us better opportunities to set up trades with higher probabilities. So, in conclusion, the average daily range can help us set up realistic risk reward for intraday trading. The more days we have on the highs and lows of the average days, the more accurate our day range will be. The higher we set our percentage of extracted move, the lower the probabilities will be for us of attaining that move. So gaining 25% of the move is much higher probability than say gaining 75% of the average daily range move. And then lastly, this technique is really useful for those day trading the stock market and don't have a general idea of how to set up proper targets, or those who are prone to scalping the markets for a few cents and have the difficulties of holding on to a trade. So this technique is very good for those who generally have the problem of, oh, I wish I was on the right side of the market, but I got out too soon and now the market's running away, and I have to sit back and watch the market go as I exit the position too early. So I hope this technique is helpful for those who have difficulties setting up their profit targets. We will do a lot more of these videos in the future. I hope you guys find this useful, and I'll talk to you guys next time. Bye.